Hey everyone, I wanted to shoot a quick video with the key takeaways from RENTV's Orange County multifamily panel that I spoke on. I wanted to share some high-level points that I shared within the panel. So this is for Orange County between 5 and 100 units within the marketplace. So overall, we talked about supply and demand. We talked about supply is ticking up. There's a total of 48 multifamily properties currently on the market here in Orange County. That's a little higher than normal. Usually assets are clearing much faster, but right now we're seeing more assets coming on market than there are buyers acquiring them. So not every asset is selling, or it's taking longer to get these properties sold. Rents on the top line market level in some markets are starting to flatten out. We are starting to see some concessions being offered within the marketplace. So that's something that we're paying attention to. And then talking about kind of year over year. Last year in 2023, we saw about 120 transactions closed between 5 and 100 units within Orange County. That was a total of about 500 million in deal volume. So that's something that we want to compare to this year. This year we might see transactions fall off, maybe because there's less transactions going on right now than there were last year. Cap rates today are on average 4.5%. Last year it was closer to 4%. The prior year in 22, we saw $1 billion clear the market here in Orange County, and cap rates were in the high threes on average. So you can kind of start seeing we've started the transaction volume is actually still dropping. Pricing is starting to kind of bottom out. It's as it seems. We don't have a crystal ball, but I think that's what we're feeling in today's market. And then going into what's closed year to date, there's been 16 transactions closed year to date as I film this. So there's been 16 transactions closed. That's, if you were to look at it on a quarterly basis, this is a pretty slow quarter for the market. A lot of the transactions taking place are smaller assets between the $1.5 and $5 million deal size. That represents 68% of the market of transactions that trade are between $1.5 and $5 million. So if you're a buyer, that's a market you want to pay attention to. If you're a seller, that's where the transactions are taking place. Transactions north of 10 million, it's really dropped off. There hasn't really been much. Just a few have taken place this year. So we're seeing higher interest rates for longer. We're seeing assets taking longer to clear the market. Selling cap rates could start to tick up. We'll see. But it does feel like there's so much money on the sidelines wanting to get into the marketplace. We might start to see some pricing bottoming out here in transactions. Hopefully we'll start ticking back up. But these transitions within the marketplace where we're in a little bit of a slump on a sales side, interest rates are way up, it doesn't take a quarter or two for these to work for the system. It takes years. So we're probably halfway through that, and at least that's what the market is talking about. Santa Ana, transactions in Santa Ana have been tough. We've seen values really impacted from rent control. That has got a stronger rent control than the statewide rent control. It's 3% or 80% of CPI, whichever's lower. So that's really been putting a damper on that market. There is still assets clearing, but some of the comps that are going through are at some very low price per units. There's little buyer competition unless there's a very compelling asset or a compelling cap rate going in. You've got to have something compelling, or there's very little buyer competition or buyers at all. There's 1031 exchange buyers in the market. However, they're very few and far between. We're representing a few 1031 exchange buyers on purchases right now. We've got some more entering the market, but it's not what it was back in 21, 22, or even the first half of 23, where we saw a little bit more exchange activity going through the system. So it could be a good thing. If you're a buyer in this market, there's less buyer competition. Could be good for you in that scenario. As far as financing and closing transactions, we're closing assets with new financing, owner carry financing. We've had multiple of those recently. We've had bridge loans. We've had lenders that have leaned in and put on bridge loans for borrowers acquiring assets. We've done cash, assumable loans. So there's been a lot of getting creative and leaning in and structuring deals and transactions to get them completed for sellers and for buyers. There's been a lot of inbound engagement from investors that want to deploy capital within Orange County. There's so much on the sidelines, and yes, a lot of investors are getting 5% on their money in a money market account, and it's hard to get a 5% return on assets year one It's a lot lower than that. So it's got to be a compelling reason for an investor to put money to work. However, there's so much money that wants to be within the Orange County market. We're seeing money come from LA. We're seeing new money coming into the market from buyers that are forming within the market. And as a team, we have to stay on top of this. So I think that's more or less what we're seeing within the market. We're not really big on forecasting what's going to happen, but it's more of a feel based on the transaction volume we're completing right now. We have 12 assets, as I filmed this video, under contract, slated to close in Q2, most in which are going to be in April. So there's a lot of data points we're getting from all the transactions we're dealing with. We also have 20 properties on the market right now. So we're seeing who's buying, we're seeing where offers are coming in at. It's a lot of good data points that we're happy to share. So all in all, we're very grateful to be within Orange County. We're very much long-term believers within multifamily real estate. This is just a little bit of a transition as a market, and if you can position yourself well, you can take advantage of opportunities and be ready for when those right assets come up that meet your investment criteria. So overall, that's what we're seeing in the market. If you want to talk one-on-one with me or anyone on our team, we're here and happy to help. Thanks so much, and we'll see you again soon.